Hello, everyone. This is Deborah Richardson, and today I am putting the AP in Happy, where accounts payable teams are empowered to protect the vendor master file from fraud. This podcast will give a voice to accounts payable team members by talking about the growing reality of cyber attacks in their world and which vendor setup and vendor management techniques they can apply to protect the vendor master file from fraud. Visit the Vendor Process Training Center to enroll in your choice of 55 plus training sessions that will help you and your team avoid fraud, compliance fines, and bad vendor data. Or just sign up to get access to vendor process FAQs and to attend weekly drop-in live Q&A sessions. Visit training.deborahrrichardson.com today. The link will be in the show notes. One benefit of paying U.S. vendors by credit card is that the card issuer will issue any required 1099s to report those payments. So a question I get often enough is, when a vendor is paid by credit card, do you really need to collect the IRS W-9? And the answer is maybe. Keep listening. Welcome to episode 242. Do you need to collect a W-9 when paying U.S. vendors by credit card? So for this answer, I have actually 3 different scenarios. But before I get into it, I do want to just reiterate that you should look at the IRS Form W-9, not just for compliance purposes. So let's say you have a reportable vendor and you are paying that vendor via an ACH or check payment method. So you would collect the W-9, you do an IRS 10 match to verify that the legal name and tax ID collected or that are on the W-9 match IRS 10 records. And then that way you won't be liable for fines and penalties, because when during tax time you send the 1099 to your reportable vendor and you file the related 1099, that vendor legal name and tax ID combination will match IRS records. But that's not all the IRS Form 1099 is for. You also need to collect it from non-reportable vendors. And most of you probably know this. And at least 2 reasons why you still need to collect it. One, because at the time of vendor setup, you don't really know what they will eventually be paid or what those payments will eventually be for, whether they are reportable or not. And a couple of examples is, you might have a corporation and technically the tax classification of a corporation is not reportable. However, if you are making attorney's payments or medical or healthcare payments, yes, they are reportable. The payments themselves are reportable. So you do need to collect the IRS W-9, and it could be too that, and we always have internal employees tell us this, right? They always know that $600 threshold. So you may be purchasing, or they may have an initial order for a vendor for, $599. And because it's under $600, right? You don't want to collect, or they don't want to collect the IRS W-9, but they like the product so much in March, right? Now in August or September or November, they want to order something else. And so now that takes you over that $600 threshold for that reportable vendor that initially they said they're not going to spend more than $600 for. So that is right? The biggest reason why, or a big reason why you always want to collect the W-9, because you don't know what you're eventually going to pay them for. You don't know how much, especially if you're setting the vendor up in the beginning of the year. You don't know how much you're going to end up paying them for the year, and you don't know all the different types of payments that you're going to make to that vendor in that year, especially if the vendor team or AP is really separate from the internal team member or procurement team. And so you may not have a relationship with the vendor, and you really don't know what they're going to end up being paid by the end of the year. So you set everybody up, and when you do that, you collect the IRS Form W-9, whether they are initially reportable or not. And even if they end up being true to form, not reportable, and why? Because of the second reason, because you want to make sure the vendor is real. And one way to do that for U.S. vendors, actually, you can do it for non-U.S. vendors too if they have an IRS tax ID or a U.S. tax ID. But one way to check that is to verify their legal name and tax ID matches against IRS records. Why give the fraudsters an easy way to get set up in your vendor master file? Put a deterrent in their way and require that IRS W-9. And yes, I know they can just go right on some of these websites for your vendors and download the IRS W-9 and send it. I get that, but you should have some other controls in your process to also work with the requirement for the W-9 to prevent that fraudulent vendor from being set up. But it starts with or includes the control of the W-9. Or W-8 for that matter for non-U.S. vendors. But today we're talking about U.S. vendors. All right, so all that being said, I always recommend that no matter the reportability of the vendor, you need to collect the IRS W-9 from all U.S. vendors and then retain it as due diligence support. And that can also be true even when a vendor is being paid by credit card. So let's get into my 3 different scenarios to answer the question, do you need to collect a W-9 when paying U.S. vendors by credit card? And again, this is a question that is typically asked because the card issuer has the onus to send the vendor a 1099, and you and your company don't have to send the vendor that applicable 1099, which translates to you don't have to worry about IRS fines or penalties for having bad information. So my answer is, it depends on how the credit card payments are issued. So let me take you through 3 scenarios, and there could be more, but I've got 3 based on my experience as a practitioner and with clients and teams that I work with. So the first scenario is if the credit card payments go through your accounting system or ERP. Now, if that credit card payment is a payment method in your accounting system or ERP, then that means that just like when you have an ACH or check payment method, that pay file has to be generated for the credit card payments. And when that pay file is generated, it's going to pull in all the vendors that are slated for that payment method that have invoices that are ready to be paid. And in order for that to happen, that vendor has to be set up in your vendor master file. So you have to set the vendor up in the vendor master file, and then that way the invoices can be posted. And when you set the vendor up, you'll select the credit card payment method, right? And so when the invoices are posted and they are ready to be paid, then the payment file, when that is run for the credit card payment method, then it's going to pull in that vendor, and it's going to have make that payment. And so because you have to set the vendor up in the vendor master file in order for that to happen, you need to make sure that when you're putting that information in your vendor master file, that it's accurate and that it's valid and it is a real vendor, because you want to have accurate, valid information in your vendor master file. So collect the W-9 and do the IRS 10 match, amongst other validations that you should be doing as well. But just related to the IRS W-9, collect it, do the 10 match, make sure that vendor is real. Okay, that was the first scenario. The second scenario is if the credit card payments are issued via a third-party payment solution provider. And so in this scenario, you most likely will need to generate a pay file with all your vendors that have amounts due, and then send that pay file to the third-party payment solution provider. And the third-party payment solution provider will then remit that vendor for whatever payment method they have enrolled that vendor for. So whether that's ACH, whether it's check, or whether it's credit card. And it all depends, right, on the third-party payment solution provider. But typically, when you have outsourced your payments, then you will generate a pay file for all the vendors and their invoices that are ready to be paid. You send that over to the third-party payment solution provider, and they will take it from there. I actually really like that, because in some cases, you don't have to retain or store the remittance information for that vendor in your accounting system or ERP, which cuts down on external and internal fraud. But in any event, so the vendor is being paid by a credit card, but you've got to send their information over to that third-party payment solution provider that you've contracted with to make those payments. Now, you probably caught on already, but because that vendor has to be sent over in a pay file along with their invoices, that means that it's going through your accounting system or ERP, which means you do need to set that vendor up in your vendor master file. And because you have to set the vendor up in your vendor master file, you need to collect the W-9. You need to validate with the IRS 10 match, and then do other validations as well to make sure that vendor is real and make sure the information is accurate. All right, so now you're thinking, well, man, 2 of the 3 scenarios, I have to set the vendor up in the vendor master file, and so I still need to collect the IRS W-9. But okay, I'll give you a little reprieve with the third one. So the third scenario is if the credit card payments do not go through your accounting system or ERP. So if the credit card payments are paid outside of the accounting system or ERP, like if somebody paid online, telephone, maybe they pay with a P card, right? No purchase order is required. Then you don't need to have a vendor record. And because you don't have to have a vendor record, then that means you don't need to collect a W-9. And if you could just think about, right, all of the different vendors that all your various people or internal team members may be paying with those P cards, you should probably be happy right now. But because you don't have to collect that W-9. And again, it is because you do not have to set the vendor up in your accounting system or ERP. And I will tell you, this is a scenario that when I was a practitioner, we used to have quite often, but we had it more so. Well, we did have a lot of P card activity, but we had it more so, or I appreciate it more so for one-time vendors. So if for any reason we had one-time vendors, I always check to see if they could be paid with a virtual card or P card, because number one, I wouldn't have to set them up in the system, because one of our systems, I had 7, but one of our systems would automatically, if you set a vendor up as a one-time vendor, would automatically inactivate the vendor after that one payment. But the other accounting system or ERPs, or actually multiple ones of them, did not do that. So we would have to set the vendor up, make the payment, and then remember to go back and inactivate that vendor. So it was a big old pain. And we typically, for those one-time vendors, did not get a lot of information on them either. And so I always tried to make sure that if we could pay them by a P card or a virtual card, we did. And if that is the case, then again, you do not need to collect a W-9, IRS form W-9. Don't need to pass go. You can let the credit card issuer handle the 1099 where applicable. All right, so a quick recap on the three scenarios. You do have to collect the vendor W-9 or IRS W-9 if the credit card payments go through your accounting system or ERP, or if the credit card payments are issued via a third-party payment solution provider and you have to send them a pay file. Why? Because in both of those scenarios, that information has to be generated, or those files must be generated from the accounting system or ERP, and a vendor record is required for that. The last scenario, when you can pay a vendor, or your internal team members can pay a vendor using a purchasing card or a virtual card, either online, via telephone, and it does not require the vendor to be set up in your accounting system or ERP to be pulled into a pay file to make that payment. When that does not need to occur, you do not need to collect the IRS Form W-9. So with that, I will say I am sure there are probably more scenarios that you may have that, I just haven't come across. They might be, or scenarios might be unique to your company, your industry, your business processes. But best practice is, if you need to set up a vendor in your accounting system or ERP, collect a W-9, since the collection of the W-9 serves a bigger purpose than tax reporting. You are also confirming the vendor in your vendor master file is real, and that the information is accurate. So thanks, everyone. I hope you enjoyed the 242nd episode of the Putting the AP in Happy podcast, where accounts payable teams are empowered to protect the vendor master file from fraud. Don't forget to check the show notes for the links mentioned in the podcast. And if you enjoyed this episode, consider subscribing and writing a review of my podcast on the platform that you use to listen. Stay happy.